Welcome to the marketplace. Coming up, big question: how do we strengthen the performance of the cedi, which is expected to further weaken following rising demand for foreign exchange ahead of the festive season? We will discuss. Also ahead, how does Africa fit into the UK's £1 trillion export strategy? We will be hearing from Managing Director of ETK Group, Olaji Sofolowe.
As ETK, we think that we can actually position African businesses to trade with the UK by improving their institutional structures. And I think that's where Africa comes in, being better positioned to sell with the rest of the world.
And on Let's Talk Tech, X, formerly known as Twitter, has started charging new users $1 a year to access key features as part of a new trial. Could this make or break X? Analysis ahead. My name is Daryl. Kwawu. Thanks for joining us. Details coming up. Thanks for staying with us, everyone. First up, how do we strengthen the performance of the cedi? That is a big question, as the local currency is expected to weaken for the third week running. This follows rising demand for foreign exchange from local corporates and importers ahead of the festive season. We'll speak with research lead at GCB Capital, Courage Boutin, a bit first, though, this report.
Foreign exchange support from the Bank of Ghana. This is despite the central bank's $20 million auction to bulk oil distribution companies and $2 million spot market interventions. These, many analysts said, were insufficient to meet the persistent foreign exchange demand. Nonetheless, the rate of depreciation is not alarming. The local currency lost 0.17% in value against the dollar last week, closing at 11 cedis, 84 pesos. It also depreciated by 0.86% against the pound and 0.60% against the euro on the retail market. On the interbank market, the cedi, however, posted a mixed performance.
Well, let's analyze this further. Joining us on Zoom is research lead at GCB Capital, Courage Boutin. Good afternoon to you, Courage. So is this pretty much expected as we head into the festive season? Is there cause for alarm?
Good afternoon to you and your listeners. It's a usual trend we experience around this time. A lot of the pressure you are seeing on the demand side is coming from large corporates who probably are stocking up and preparing ahead of Christmas, and then a lot of it also coming from the BDCs who are trying to get in oil for our consumption, really. The Bank of Ghana still supports them with the bi-weekly auction, but then we know the size is just about 20 million, which is just about a fraction of what their needs are, really. So those are playing a role, but there is also an externality to it, or an external cause of the pressure you are seeing. The USDs are the strongest, maybe in a while. It's had several weeks of appreciation against a basket of currencies. Reasons are inflation, while receding, is still quite high. And the policy rate stance, as we know it now, is that the Fed will keep hiking until inflation recedes sufficiently. We've seen job data in recent months, and I think for the 33rd month running, payroll employment has actually increased in the US. We've seen unemployment level drop to near lowest levels, and then inflation adjusted wages also increasing, showing just the health of the US economy, really. Now, under such circumstances, the US dollar will be rightly strengthened, and that is the case. So the dollar is stronger against a number of currencies, which naturally will mean a depreciation for us. I must say that given the context, the fact that our reserves is quite weak, much lower than it was in 2022 when we experienced the levels of depreciation, really, the cedi as it is now, even with the trend we're seeing, is much stronger than it should be. And I think that's what is happening around this period is really just market driven. The demand dynamics around this point relative to the supply levels, which now is coming mostly from the central banks intraday and forward auctions, and of course traders and export receipts that are hitting the market. Beyond that, we are not seeing flows from the portfolio side and the many other areas that you would expect really. And so the Cedi, even with the trend we are seeing now, is actually very stable.
Should the central bank be doing anything to further strengthen its performance as you approach the festive season?
The focus, I mean, yes, they are doing something, I believe. They are intervening on the market. Weekly, you are seeing about $2.5 million intraday interventions on the spot market, really. You are also seeing the 20 million forward auctions. Is that enough? Probably not. But can they do more? I don't think so. The focus, as we know, it is on building reserves at this point because we are at such low levels. Maybe in the coming weeks, if the cocoa syndication loan hits the account, we are also looking forward to today's 18th, really. So November is not very far away. The IMF is expected to approve a program if we meet some conditions precedent. The World Bank is still yet to come through with, or expected to come through with, some $500+ million in some DOP, really, DPO, I must say. Now, if these liquidity flows coming, then it strengthens the Bank of Ghana's position to probably be able to do more in the latter part of the quarter. But I believe that the focus is also very much on building reserves, and you wouldn't want to deplete it so much just to support some stability and leave yourself very vulnerable again. I see 1.2 per month of import cover in the latest releases from the IMF World Bank, really. The government is looking at a target of 0.8 months of import cover towards by end of year. Those are not figures that are very encouraging. And so there must be that urgency to also protect and build up reserve to avoid any vulnerability or to limit any vulnerability to external shocks. And I guess they will balance their focus between that and then supporting the markets at this point.
Well, a quick question before we wrap up on this. The producer price index, as reported today by the Ghana Statistical Service, shows producer price inflation fell by 3.1% to 25.1% in September, and that's a big improvement from where we used to be. Talk to us about what this means for general inflation going forward, juxtaposing it with concerns, especially from manufacturers about the Cedi.
Well, yes. I mean, that represents the costs or the prices these manufacturers are receiving for their products on average, really. And so if it's receding, what it means is that they are willing to accept lower prices, which also means their cost of imports may not be as high as it was previously. But then, yes, 3.1 decline, but I think at 25.1, it is still high. It will feed into inflation. And so it feeds into the general trend we are seeing on the market where consumer inflation is also on the decline. The economy is not yet stable, even if there are signs of improvement. The cost of inputs, especially the ones that are dependent on FX, is still very much a dicey issue. And pricing will take a cue from that because, yes, Cedi may be stable now, and it has been for the most part of the year. But we know that one trigger is enough to put things out of order, really. And so it's a positive development, positive trend. It feeds into the slowing CPI inflation that we are seeing. But then the interventions must be sustained to bring about a stable macroeconomy where interest rates are predictable, where exchange rates are predictable, and the cost of inputs ultimately would also be predictable. That is when we can have sustained decline in these numbers and by extension CPI inflation.
All right. Thank you so much, Courage Boti, the research lead at GCB Capital. I appreciate your time with us. Now, the Ghana Export Promotion Authority, GEPA, is rallying Ghanaian businesses to take full advantage of the economic partnership agreement between Ghana and the European Union to export goods to the EU market. According to Deputy CEO of GEPA, Samuel Dentu, the EU market offers limitless opportunities for Ghanaian businesses to expand and go global. He was speaking at a press soiree to launch the Compete Ghana GEPA Expo School.
I mean, if you look at our export statistics, EU is about, one of the top 3 regions that we send our exports to. So we have taken advantage, but we still can take more advantage. The opportunities are enormous, and we have the products, we have the knowledge. We need to keep at it and ensure that we sell more into the EU market, because as you know, the EU is a cluster of countries, and everybody or everyone in the EU market have heard about one product or the other from Ghana. However, like Nicholas mentioned, there are requirements, there are standards, and these things need to be learned. And that is what Ghana Export Promotion has been doing over the years and will continue to do, so that we can assess the market. For us to be able to play within the international market as far as our food and other things are concerned, we just need to conform. And you can't conform if you do not understand or you do not know. And that is why GEPA has gone into this partnership with the EU Compete Ghana project that is implementing the economic partnership agreement. Ghana Export Promotion Authority has been the main pivot around exports. Of course, there are multinationals who operate from here and send them into their market, but we also acknowledge the fact that Ghanaians need to play within the sector, and if you want to play within the sector profitably, you need to learn about it. So that's what we keep doing, and we encourage many of the SMEs, the businesses who want to play within the export space, to come to Ghana Export Promotion Authority, register for the school and learn about the EU market.
Well, team leader for the EU-funded Compete Ghana Expo School, Nicholas Gebara, told Joy News that whilst businesses have taken advantage of the economic partnership agreement to export to the UK, there's still a bigger untapped market share that must be taken advantage of.
Economic partnership agreement is a two-way agreement between Ghana and the EU, and it's to the advantage of both entities. Now, it's all about decreasing the trade barriers and increasing the level of trade between the EU and Ghana. Now, it has been signed in December 2016. It's an imbalanced trade because it has offered Ghana to open up to the market of the EU, quota-free, duty-free. All duties have been removed for products, 99% of the products since December 2016. I mean, when we look at the nature of the trade between EU and Ghana, what comes out from the EU to Ghana is mostly machinery, high technological machinery that I mean, basically will be constituting the inputs in the production of Ghanaian industry. So there's no real competition. We have made an impact assessment and a risk assessment, and we found out that on many of those sectors that we have identified where there could be a potential threat to the local industry, that there's no real threat. That is number one. Number two, the Ghanaians, yes, since 2016 there has been a doubling of export, yes, but there's still a lot of potential to be done. Why? Because the consumers in the EU, they are sophisticated, they have the purchasing power to buy products, but they're also very highly conscious of the fact that we need organic products, we need ethically produced products, and should we have that, and we need many of those exotic products that are not available in the EU. So Ghana has them. Ghana has the capacity also to start processing a lot of those products. There's a lot of potential which lies there. The opportunity has to be taken by Ghanaian companies. So the essential challenge for them is to understand the requirements and the standardization, certification, all these documentations that are needed to export properly to the EU.
While still on matters of trade, the UK's Department for Business and Trade announced earlier this year that it was working with businesses across that country to encourage them to export for the first time or expand their existing international sales to support its mission of reaching £1 trillion in annual exports by the end of the decade. Now, businesses are being encouraged to explore opportunities from across the world to maximize their potential. The UK's share of trade with Africa was 30% not long ago, but now it's less than 4% after leaving the EU. the UK can now engage with Africa on its own terms. So how does Africa fit in the UK's quest to increase exports? Bolaji Sofoluwe is Group Managing Director of ETK Group, joins me on Zoom. Good afternoon to you. So £1 trillion in annual exports by the end of the decade, that seems rather ambitious drive by the UK.
Daryl, obviously, I'm sure you've sort of heard a lot about sort of the effects and the ripple effects of Brexit in the country and how the UK is trying to reposition itself as a global trade player. And so in the last few years, the last couple of years, the Secretary of State for International Trade has been, touring the globe, establishing free trade agreements with countries that we feel are strategic. And we're looking to sort of plug the gap between it's a 400 billion gap at the moment. So we're looking at 1 trillion. We're calling it the race to 1 trillion. And at the moment, trade is at 600 billion. And we're hoping that we can plug that 400 billion gap to get to 1 trillion.
So how does Africa fit in this agenda by the UK?
One of the things that so obviously my company, ETK Group, is a trade advisory and market expansion expert. And in the last sort of 13 years, what we've seen more of is British companies trying to export and trade with Africa, but what we're trying to do now is change the narrative. And also not just change the narrative, change things in the practical sense, where African businesses are also able to sell to the UK. Now, of course, this isn't always something that's balanced for various reasons, but we think that as ETK, we think that we can actually position African businesses to trade with the UK by improving their institutional structures. And I think that's where Africa comes in, being better positioned to sell with the rest of the world.
How do they position themselves to benefit from this, maximize export opportunities to the UK? What more can they do?
There's certain standards, obviously global standards, that businesses have to adhere to. I think one of the key areas that we've been discussing in more recent past is things like the rules of origin, which is a very simple element where it comes to trade. And, the fact that, there's a lot of Ghanaian yam coming into the UK, only that it's actually Nigerian yam. And so and so some of these very basic trade rules are, the difference between being able to scale your international business, particularly into the UK, and not being able to scale that international business into the UK. It then limits the kind of buyers that you have over here. So one of the first things we need to do is give some more detailed trade facilitation education to small businesses so that they understand some of the key terms like rules of origin, like tariffs, like letters of credit, and all of those basic elements that they need to be able to trade globally. I think they just need to educate themselves a little bit more.
Are there any sectors of maximum interest?
I think one of the things that Africa undersells is our creative industry. I think when you think about the fact that most people, when they think Africa, they start to think commodities. They think raw commodities. When they think of Ghana, they think of, gold. When they think of Cote d'Ivoire, they think of cocoa, But actually, what Africa has is a diverse range of sectors that are ripe and capable of exporting into global markets. And I always touch on creativity because obviously you've seen how the music scene has shifted quite significantly, with quite a number of African artists coming into the global charts. You have the movie industry as well that is growing, and African culture is seeping into everything, the fashion industry, etc. So I don't think we should limit ourselves to commodities or products. I think there's also room for non-oil exports as well.
And do you foresee any challenges with this initiative by the UK? I know that the UK has got very stringent requirements. And so since you work in that space, do you foresee any challenges?
I think, one of the biggest challenges, I would say, would be around sort of access to finance. I think this is always one of the major issues that most SMEs face. just being able to scale up their businesses, to the extent that they can meet demand in international markets. I think that's probably the biggest issue. And this is one of the issues that ETK is trying to intervene in, just trying to make sure that these companies have access to trade facilitation tools, such as better sort of payment terms, where, because again, you're selling to a big supermarket in the UK, for instance. They're going to give you payment terms of like 90 to 100 days. How many African businesses can survive, and when they're not paid in that sort of space of time? So these are the kind of things, they need some trade finance, some working capital to be able to fulfill the orders and survive until they're paid. So for me, I think access to finance is pivotal.
I want to finally ask you about AfTA, because African countries are increasingly trying to trade amongst ourselves. So how do you think African countries can leverage AfTA to boost overall trade with the UK and boost our economy as well?
This is one of my favorite topics at the moment. How the Africa Free Trade Area. So as you know, as Brexit was happening, the Africa Free Trade Area Agreement was being ratified and it was an interesting experience, because as a bloc, it means that we have better leverage, we have better negotiation positioning as well. So I think what Africa needs to do, and I always say this, is that our leaders need to get together and talk about what our USPs are in each region, in each country. And we need to use that to collaborate and to coordinate so that we can sell to the rest of the world better, and also sell to each other better. Because, I mean, again, at the end of the day, we're also trying to increase and nurture competitiveness across the continent too. So I think these are some of for me, I feel that there needs to be a coming together and a meeting of minds, and ETK is driving some of those conversations as well.
Thank you so much. Bolaji Sofuluwe is Group Managing Director of ETK Group. I appreciate your time. Well, time to talk tech. We want to talk about X. Elon Musk's X, formerly known as Twitter, has started charging new users in New Zealand and the Philippines $1 a year to access key features as part of a new trial. Now, they include the ability to post, repost, like posts, and reply to posts. To what end? And is this going to make or break X? Well, lead for Eyes of Africa, Henry Kobler, joins me on Zoom to discuss this. Henry, good afternoon to you. Why is X doing this? What is the platform seeking to achieve?
Thank you very much, Daryl. So, I mean, generally, we've had this coming when Elon had taken over X, and generally, if you're looking at the finances or the revenues of the company since he took over, there's been a very downward point for X, and so he sort of is looking at every opportunity to raise the revenues for X. Generally, his comments, which has been widely spread of, just generates to say that he's looking to cutting down bots, which are sitting on Twitter, and so he's sort of looking at cutting them off. But generally, if we're looking at what he's sort of seeking to achieve, he's trying to also make sure that he's making some level of revenue inflows coming in. And so it started with the X. People thought was going to break it. It didn't really break it off. So now he's sort of looking at how do I get to have people sort of paying from the barest minimum and could sort of go into subscription modes, which generally has been one of the most important things he's been sort of looking at. And I think that it's really up to a time where we're having one of the social media platforms relatively being clear, putting in some subscription models and getting users to sort of pay, and also working away from the advertisement model, which had already been experimented over years.
Yeah, I know when he spoke about this some months ago, about a monthly subscription for X users, the reaction wasn't that great. And this is supposed to be a trial, $1 a year in the Philippines and New Zealand. But ultimately, do you think that he's going to get the buy-in of users, or would this fail?
I mean, Elon is a very smart person. I mean, you're just looking at it from the surface where it's just $1 for people. But Elon relatively is looking at making this platform a one-of-all platform. And so he's looking at how do we start connecting payment systems to this platform? How do we sort of understand people's payment systems in different countries? How do we understand taxations in countries? How do we understand political terrains in countries? And so $1 relatively is just looking at a subscription model from the start. it might not be too easy for him to sort of cut it off, especially with countries like Africa, where we're still getting ahead of putting in our payment systems together. And so, I mean, you're looking at how you could definitely be paying this $1 on mobile money. And that's the thing I really foresee Elon is sort of looking at. And so it's sort of not just about him trying to put $1 for people to pay to get access to the features that are sort of on the platform, but sort of trying to put a platform in a perspective where he could do so much with the platform, ignite payment systems on the platform, get people's data sort of on the platform, put in a lot of artificial intelligence on the platform, connect with cryptocurrencies on the platform. Essentially, that's what sort of he's looking at. But it has to start from somewhere. So do I put in a feature that people would sort of need, but will sort of have to pay for the feature? I think that's a starting point for him, and that's where he's sort of going.
Or there are two concerns from one article I was reading about the potential of X losing a chunk of its users because of this, and this also driving down advertising revenue. How serious is this?
Yes, I mean, you're going to lose some, but you sort of also gain some. And at an experimental point, we're looking at New Zealand, which has sort of a better off in terms of payment systems. They can connect to PayPal. I think they've sort of adopted well with cryptocurrency and all of those things. And so, yes, the concerns are legitimate, but I mean, he's a businessman. He sort of has to pilot it. He's sort of not going to just go with speculations and understand it from that point where he's sort of going to see how users are going to go with that. He sort of has to come in with some level of experiment away from all the social media platforms that are running and see how better off he can say, hey, I'm getting bought of the system, and so my system is sort of better off to have interactions. I mean, you can understand that X has been cited up high when it comes down to terrorism and conflict journalism on it. And so you can sort of understand that he's sort of also looking at how he puts his platform in the perspective where he gains more trust, and the people that are sort of on understand that they are sort of paying for what they deserve, and so they can sort of hold accountable the company and run. So we're going to lose some very crucial people. There have been quite a number of people that had left off Twitter to be on what Facebook had sort of built, and it really didn't get too far. It's still sort of struggling, but I think that X is still on its feet to make gains, and I think that it would be positive for them.
All right, Henry Kobler, lead for Eyes of Africa. Great to speak with you this afternoon. And that's the marketplace, everyone. Thanks for watching. There is more news on our website, myjournalline.com/business. My name is Daryl Kwawu. We will be back same time tomorrow.